Welcome back. You're watching HFO-TV, co-sponsored by AMF Capital, the Baljanik Law Firm, the Butler Exchange Group, and the construction firm J.R. Johnson.
Welcome back to HFO-TV, COVID-19 edition. We're lucky again to have with us Christian Kaylor, economist for the state of Oregon, workforce analysis specialist. We've had many times before, so in these crazy times that we're in, it's great you could take some time to kind of sit and talk a little bit about what you're seeing data-wise and what's going on from employment and during this COVID-19 pandemic. So thank you again for taking the time to do this. And we'll try to make this as smooth as we can, though we're not in person, but we're starting to get the hang of these meetings, but we'll see. I know you said some data is coming out today. We're here at the end of May, and so maybe kind of talk about what you're seeing state of Oregon-wise, and we'll kind of go from there.
Sure. This morning we put out the unemployment rate for the Portland area, 14% flat for the month of April, relatively in line with what we've seen with the state of Oregon, the rest of the Pacific Northwest. A few things that do stand out: tourism-heavy economies. Lincoln County and Clatsop County, that's the North Coast, Astoria area, Cannon Beach. Almost 25% unemployment rates up on the north coast there in Oregon. I think 18% something in Central Oregon, the Bend area. That sort of fits with what we're seeing. Tourism very, very hard hit. We're looking at more than half of all jobs lost in a single month from March to April in restaurants, bars, hotels.
So that kind of models what we've seen in Orlando, New Orleans, Las Vegas, those metropolitan areas leading the pack on the unemployment side.
Yeah, Nevada has, I think, the highest unemployment rate right now, 28% in the country, which, again, I don't know that I would have ever lived to see any state in the country with 28% unemployment, but here we are.
Yeah, and again, we just talked off there about where we were, last year, the numbers we were looking at from we were under 5% for 3 years in a row, or?
It's pretty remarkable going from historically the lowest unemployment rate in many decades, well below 4% unemployment rate in February, to what is the highest unemployment rate in many decades by April. I have a colleague, he started in January, and I sort of blame him. He doesn't think it's funny. Yeah, I'm like, wow, when you got hired, the economy is in much better shape. I'm a little concerned.
Yeah, there we go. So now that number, that 14% for Portland, that's April's numbers. So again, in March, we didn't have the full effects of what's going on. So it'll be interesting. What do you think we're going to see in May if you had to take a guess?
So that's interesting. So the official state forecast that came out on Thursday comes out roughly quarterly from the Office of Economic Analysis. They see unemployment rates in Oregon averaging low 20s for Q2 of this year. In fact, looking at it, 22.7% unemployment rate for the second quarter. So that's April, May, June. We know April for the state of Oregon is about 15%. I guess they're essentially assuming that June and July will actually be worse. May and June will be worse. I'm skeptical about that. Again, these are sort of shock numbers.
Right.
I expect, disproportionately tourism type of events and event types of things. So like catering companies, wedding sort of events, bowling alleys. I assume they won't lose any more than they did in April. I'm sure they won't get them all back in May and June, but I would think, they'd see some recovery of some of those jobs as restaurants pivot to takeout and delivery. So I'm skeptical we will see above 20%. I suppose it's a possibility.
Yeah, I know we've talked before about, what's the effect of like the stimulus, the PPP loans, the things like that. Are you going to see if we don't get another package? Again, we're doing this at the end of May, and there's something sitting in front of the Senate, so we don't know. But if, will you see as maybe things open up and you have some maybe employment going, and that will be offset by some of these other companies that maybe have to lay people off again? It's just going to be an unknown. So,
yeah, I see roughly three major threats here to the economy that represent real unknowns in any forecast. One is a second wave of COVID, say in the November, December timeframe. We don't really fully know. I'm not an epidemiologist, but it's easy to imagine. I know the director of the CDC has talked about this seriously.
Right.
The strong potential to have a second wave during the holidays that would require a new wave of governmental restrictions on business activity. That's a big question mark right now, but I think it's a serious potential. It needs to be considered. The second one, as you mentioned, is the CARES Act. A lot of this stuff is set to expire in late July, including the sort of super unemployment benefits that we're putting out now. I would generally assume that there would be an extension of those, but given the partisan atmosphere in an election year in Congress, Senate, and the White House, I mean, how much longer will those continue, or will they be ramped down noticeably in July or August or September or next year? Again, huge question marks. The Federal Reserve Chairman Jerome Powell did a great job doing the same thing Ben Bernanke did 10 years ago, almost openly pleading with Congress to become, start putting more money into the economy. He's done everything he can, new stuff that the Federal Reserve has never done before. And like Bernanke before him 10 years ago, would like to see, take some of that responsibility off of his shoulders, put it onto Congress. It's an open question as to how much Congress will decide to do that or not do that. A lot of that's very partisan.
So how do you, as a Oregon economist, how do you factor that in? Because again, people I'm sure are coming to you from the legislative side, private industry, asking for a forecast for, where are we going to end up? What's it going to look like? I mean, is it, you just have to give different scenarios based on where such an unprecedented time. And again, the stimulus that's been injected, and there will be, we assume there will be more, hopefully, but you never know with the political environment. How do you kind of reconcile that looking forward as to trying to give an idea where we're going to end up?
Yeah, I mean, that many questions, it's tough. I would say the two other question marks that I sort of keep me up and challenge me going forward is, so far as bad as this is, 14% unemployment in the Portland area, it seems relatively isolated to maybe a third of the economy directly affected. So, manufacturing's down, but it's down like 6%. Construction's down, I think, more than that. And within manufacturing, high tech has not been affected. It's mostly food manufacturing. So, I mean, as you go through the first sort of initial numbers we're getting here now, a third of the economy incredibly hard hit. But I would say almost a third of the economy, as far as I can tell, almost no effect at all or very little. So, optimistically, if that part can be contained and then repaired and restored over a 6 or 12-month time frame, I feel like it's reasonable to think that next year at some point there will be a vaccine, or at least in 6 months there'll be a solid promise of a near timeline to have a vaccine out at some point in 2021. Then everyone can pretty much envision in the short term moving back to something normal.
Right.
But again, part of the problem with recessions is they make the U.S. economy fragile, and there's a resilience issue. So if we were to have a political instability event, a natural disaster, an earthquake or a tsunami, say Superstorm Sandy hit New York again, say we had a 9.0 earthquake in California, at this point, it would damage us much more than it would in a healthy economy, because we just aren't healthy enough to kind of absorb that like we normally are. So if something like that were to happen next 6 months, a war or something, some sort of financial crisis, a banking crisis or something, we're much more sensitive to those than we normally are. So that's another sort of downside risk. The other one that I noticed flipping through the state forecast from the Office of Economic Analysis, it was a slow recovery coming out of the last two recessions. And I would say especially the last recession, 09, 10, 11, and 12 were pretty bummer years for very slow economic recovery, depending on where you look. Certain industries came up fast, but the broader economy, particularly things like manufacturing, really struggled to get jobs back 2010, 2011, 2012. And it wasn't really until 2013, 14. In some industries, some communities, they still haven't gotten those jobs back. And so, especially more rural areas and more things like food manufacturing.
But Oregon's historically like that. Are we usually kind of sometimes last to get in and kind of last to get out, so to speak, in terms of that, or is that?
No, I mean, I think that's more of a rural phenomenon.
Right.
It's funny because one of the things that not particularly interesting maybe for this conversation, but Douglas County put out their numbers, and they have a higher unemployment rate than we do. They're at about 17% for April, so higher than the Portland area. And again, that might be, they have casinos and things in a way that more dependent on that sort of tourism stuff. Maybe Portland even is, relatively speaking. They're a smaller economy. And they said, well, that's a record unemployment level for Douglas County going all the way back to 2009. So they hit more than 18% unemployment just 10 years ago. And just flipping through their numbers, they were frequently at 10% unemployment in non-recession years. So rural Oregon is always, it's pretty different. One of the advantages Portland has had the last 20 years is we're actually faster coming out of recoveries. We're one of the strongest coming out of the last recession. And part of that was people love moving to Portland for a new job. They love changing their life, especially younger professionals and college graduates. They just want to move to Portland. And so for a new economic opportunity, we'll do that much faster than, say, a Midwestern city like Columbus or Cincinnati or Detroit. And again, that's some sort of lifestyle thing in terms of once the jobs get created, the workforce likes to move to places like Portland, and the businesses follow them. So I suspect it'll be the same. Once the national economy gets sorted out, I expect Portland will recover faster.
As we have the same advantages we had back in 2010 in terms of recovery. We still have the same natural advantages that we did in the last two recessions coming out of those. And I think, again, to rural Oregon, I think they have the same natural disadvantages that they've had in the last two recessions. They just don't have a diverse economy. They sort of have, you have a lot of rural communities that have sort of one industry or two industries. The factory shuts down, it doesn't come back. It's just a very different story. Portland's really lucky because we're an incredibly diverse economy. So we have tech, but it doesn't dominate. We have tourism, we have a basketball team, but that's not a dominant feature of our economy the same way it is in Bend. We have food manufacturing, but that's not a dominant feature. Like, the wine industry is huge in Washington County. But we're actually relative to a lot of places like Detroit with cars or something, or Orlando with tourism, Las Vegas with tourism. We're diverse enough that that's a real advantage to us, both in a recession and coming out of it faster. So with Portland, when you look at Oregon, Portland, and the rural, it's kind of very similar, probably nationally, with the West Coast, and it kind of matches up in terms of the diverse economy on both sides.
I think Seattle and the Bay Area are disproportionately tech.
Right.
And so far, tech has barely been affected by this. And in fact, companies like Zoom, seem to, I will say companies like Casa, Airbnb, I don't want to generalize to say that.
Well, but there's questions about those. Are they really tech companies? Those are they?
That's
What is a tech company? Everybody's got
Exactly.
an app. Everybody's got a Twitter.
Is WeWork a tech company, or was it a real estate company? Yeah.
Right. Was it a real estate company? WeWork is probably in a lot of trouble.
Yes.
So I don't know whether they were a real estate company or a tech company, but whatever they were, they're in a lot of trouble. But yeah, I think that generally the West Coast will do pretty well. You have again, Portland, similar to the Bay Area and Seattle, best educated workforce in America, younger, highly educated, more dynamic and flexible. We're not attached to, food manufacturing the same way Indiana is or something. And if there's a shock there, it wouldn't particularly affect us, or it would affect them. So yeah, it's probably a good story. And again, I think in most recessions, unless it was somehow tech focused, the West Coast you'd expect us to be highly resilient.
And then kind of going back to, so we've talked about this for years, it's kind of the housing and those things within, this metropolitan area in the state of Oregon. We as well positioned. We haven't had a huge adjustment, so to speak. It's not like 2009, 2010, where there was transactions and financing was gone. So this seems a little different. But kind of what's your take on that?
So yeah, there's probably two sectors that I'm watching closely, and they're actually construction and manufacturing.
Good.
If those start to slip noticeably, I would be more concerned that this is becoming a broader-based, full-blown recession across all industry sectors. Because obviously this has really been a tourism-focused kind of a thing. And theoretically speaking, fairly little capital investment is needed in those sectors, so they can pivot pretty quickly. If Intel decides to build a new factory, that's like 2 years or something, probably longer from, the day of the start of this. if somebody wants to start a new restaurant in Portland, that's
Right.
quick turnaround. You can get people pretty quickly to get that going again. So if a bar needs to shut down and restart, they can do that quickly. That's a quick pivot. So yeah, construction is down 12%, basically in a month, going from March to April. Manufacturing is only down 5%. High tech is down 0% so far. So if this becomes broader based, and again, food manufacturing, that's been a cluster for COVID. They've had to put in a lot of new restrictions for protecting the employees, and a lot of those guys have had to shut down because they just couldn't do it because of safety issues. So how long that lasts, I mean, that could be an issue. But again, that more is like a Newburgh problem. It is, and a Clackamas County issue, in nurseries and things. It's not much of a core Portland economic function, and I think it's hitting everybody in the country roughly equally with that. So yeah, I'm watching construction. Construction is down. We got the permit data yesterday for the month of April. Single family permits are down 50% from where we would have expected them to be. But they weren't down at all in March. And that's sort of a 1 month observation that we have, just April. Multifamily seems okay so far. Again, it's just a single month. And I would understand if just for a single month,
We have some
people maybe hold back just for 1 month. But those usually lead the jobs. So you see those permit numbers. If we continue to see those permit numbers low in May and June, I would expect to see a broader based construction sort of recession. I just don't know. My sense is, you've been doing this job for a while. I've been doing this job for a while. I was here in the last recession, the recession before that. We did see prices come down in real estate and then just shoot way back up again, 2011, 2012, 2013. My sense right now from people I'm talking to in Portland is, oh yeah, you don't want to sell, at the bottom and then have to come back and buy later when it's more expensive. So I actually worry, and there's I don't know how real it is yet, that bigger capitalized firms might actually come in and buy a bunch of cheap real estate in Portland, knowing that in the long term, it'll definitely come back. Whether it comes back in 3 years or 7 years, I mean, I don't know. But it seems like a pretty safe bet.
Yeah, and we're seeing in our world, again, multifamily, it's, there's the collections were better than some of predictions in May and April, which was good. Again, I think it's different if you are in what you say, like tourism or restaurants, those kind of real estate that are based on that kind of tendency. I think that's where you'll see some. But for multifamily, I mean, I've had some people say, hey, if the worst it is, my collections were, 5% what they were the previous month. Some haven't even seen any change. Average was 8 to 15% of some kind of, they can weather that storm. Again, if it's a broad-based, recession and we're having a different discussion in, August and September, that's different. But right now, there's not a lot of motivation to put something out on market unless, again, you've got other product types that are hurting.
Yeah, I think, and I've said it earlier, but this goes back to my paranoia that if this thing comes back in November and new restrictions are created, I could see a lot of smaller businesses just saying like, well, I'm not, it's one thing to shut down for 3 months in the spring, but if this is going to be something we do repeatedly, early retirement looks better and better for a lot of small business owners. That worries me, and I don't know how to predict whether that will or won't happen in the future. I do think that at some point in 2021 there'll be a vaccine, and getting it manufactured and distributed is going to take months. But I think at some point in the next 6 months we're going to see something that's in advanced trials that's having a really good success rate from somebody out there somewhere in the world, and it'll give people the confidence to know, like, yeah, it's bad, but there is a technical fix for the problem.
And you get consumer confidence kind of coming back around. Yeah.
And investor confidence. And I mean, the stock market, I never understand what's going on in the stock market, but I feel like the stock market, kind of like the real estate market, if you look at what happened in 2009 with the stock market, it's insane. The Dow hit 8,000 in February of 2009. 8,000, 4 numbers. This is crazy. It doubled in 3 years. So it hit 16,000 3 months later. 3 years later. So February of 2012. And I think, again, most people out there investing and buying, they remember that. And they're like, well, I mean, the stock market was really bad in early '09. It was a financial crisis, and the people who put money in February 2009, they doubled their money in 3 years. So this time, I think investors are sort of hanging into the stock market, going like, over a 5-year, 10-year period, this is
Right.
nothing.
Yeah. No, I agree with you.
So, and in a way, I think that's crazy, but it's in another way, maybe that's the sort of sanity we need. I don't know.
Well, and our thing we've talked about, internally here is, what happens when some of the stimulus and things like that, wear off, or the unemployment benefits, there's not another package put together. Does that, start increasing as people, maybe don't get that extra bonus in terms of rent collection in our world? So again, we heard, it was going to be really bad in April, worse in May. We really haven't seen that. Now, if we're having a discussion in August, September, it could be different. But as you said, if things maybe open up a little, maybe that's offset. It's just interesting to see. Again, we've never been here before, so it's kind of tough to figure out where we're going to go.
Given that it's such a major election year, and so many people are in trouble, not naming names, but generally senators and Congress people out there, I'm sure somebody's going to want to play chicken with, I'll veto this bill because I don't get what I want. But I think, from now till November, I feel pretty good. I do actually worry more that whatever the political makeup is after the election, December, January, we could go into a gridlock position next year. I think that's more believable, that people can kind of return to their liberal and conservative corners and want to sort of feed their base and say, I'm not voting for a package unless it includes X, Y, and Z.
Meeting in the middle is gone. Yeah.
Yeah. I mean, I assume we'll get there. And I think the posturing we see with sort of another wave of CARES Act now shows that there's definitely some people feeding red meat to their base, or on the left, curry tofu to their base, and saying, if it doesn't include this, I'm out. I'll never vote for it. It needs to have these pieces to it. I think in an election year, they're not going to get too weird, but I worry that come January, they're going to want to go back to rewarding their base. And we did see that in 2010.
Right. So, right. And do you, again, you're state economist. I mean, do you see that within the state stuff too, or is it federal so much oversees that in terms of allocating funds and things at the various states? Is that more of the bigger concern, or not even concern, but just interesting on how politics are playing in that regard? Maybe not as much in state, or what do you see?
Diplomatically, I will say that in the last 2 legislative sessions, both sessions ended with one party walking out of the legislature to deny the governor quorum to enact policy. So that's 2 for 2 in the last 2 years. I think that is a tool in the toolkit for a certain political party that is never going to have the majority, and they know that that's their veto card. Right. And they played it. They've played it twice. Why would they not play it a third time? So if, say, the governor came out with a package that had some level of tax increase, I think you can't dismiss that possibility. That said, Oregon, like almost every state in the country, cannot run a deficit. We can't print money the same way the federal government can. So, there's limited ability, and I don't know. I'm not aware of the governor proposing something that would shock Republicans, like a massive gas tax increase or something. And I don't know. Maybe she is. I'm not in that circle of trust. So I'm a little skeptical we would see a tax increase on anybody in the next 6 to 9 months from this governor. That's the type of thing where I could imagine the Republicans pushing back very hard, vetoing that essentially. But again, I see that more as a 2021 issue. I don't think that would happen in this calendar year. And I think it's more on the feds to sort of run that printing press and say, here's billions of dollars in unemployment, stimulus checks, et cetera. I would pretty much expect at least one more round of stimulus checks. I would assume, and I could be wrong, continuation of unemployment benefits through at least the rest of the calendar year. But there'll be a lot of posturing to get there before that bill passes. The current act, it ends at the end of July.
Right. So they're going to have to do something to get it going. So again, I guess the interesting part is we've never been here before. There's, I think looking in the next 60 to 90 days will be quite interesting in terms of where the numbers kind of come in terms of, if things open up a little, if they don't, what that looks like from unemployment, I guess it's lucky Oregon's a diverse enough economy. We're not so tourism service, centric that we're not having these high numbers. But so
Yeah, and again, I'd like to see it contain, and it's sort of the opposite. In a lot of ways, this recession is the opposite of what we usually see. We actually usually see construction and manufacturing leading us into
go first.
recession,
Right.
because they're looking to the future. I mean, if you're thinking about building an apartment building, or you're thinking about, starting a third shift at the factory or shutting down a factory or something, you're really looking at a 5 or 10 year time horizon. And then you're making a decision based on where you see the economy in 10 years. So those guys are actually usually more sensitive, and they'll start early. And then sort of your consumer spending stuff, like your restaurant, your hotels, that's just a function of consumer,
Confidence and
yeah. And so I got a raise, let's go on vacation, so I got a bonus, let's go on vacation. So it's weird to sort of have the cart before the horse with this one, where you have this consumer issue, and construction and manufacturing are sort of like, well, we don't see a problem necessarily. I mean, they obviously see a problem, but they're not sure how it's going to play out. I'm saving a lot of money. I'm still getting paid. I think there'll be some effect as the economy reopens, where folks like me, the second we think it's safe, you're going to start injecting money into the economy that you've saved up. I was supposed to be in Italy last month. I did not go to Italy last month, but I have $4,000 set aside in my checking account that was supposed to go to Italy. And when it's possible, it's ready
when
to go.
does that money come back into the system? If you're
Right.
Right.
And so, sitting in a money market earning 0.01%, it's not really doing anything for me. So the money is out there. That said, again, if you want to think about sort of the nightmare question marks that are keeping economists up at night when we do forecasts for the next couple of years, when will people feel safe going to a Timbers game? So if the governor went crazy and said tomorrow, everybody go to a Timbers game, fill those seats, how many people would actually physically show up would almost be an interesting question. And I think that Georgia and Florida and some other states are actually getting ready to run that crazy experiment. And clearly some people will show up, but I think you can make the tickets free, and there's no way you're filling an arena.
No, I agree. I think you're going to see, we were talking to somebody where they said, basically, if you look at consumer spending, it was going down before, some of the states did shutdowns. And the thing was, politically, they could open everything up, but that doesn't necessarily, once they open up, doesn't mean you've got 100% buy-in anymore. So it's, what is that time frame for consumer confidence to go to a show, go to, travel, all those things?
Well, I'll give you one scary statistic. After 9/11, it took 2.5 years before we saw passenger flights in the United States get back to where they were the day before 9/11.
And that's filling up the middle seat.
Yeah, right. The middle seat. And so, 2.5 years. And so when psychologically will people be comfortable sitting on a plane that's full? And I think it'll happen. I mean, I don't think it's never going to happen.
Yeah.
But I think there's some people who are like, 3 months, 6 months. And I'm thinking more like 2 or 3 years, buddy. That said, people like to spend money. It's one of those sort of, the first chapter of every economics textbook. People like money because they like the things they can spend it on. And so the money has to go somewhere.
Right.
I think that's part of what's propping up the stock market. I mean, you're just going to cash out your savings account, keep a bunch of $100 bills in the backyard. It's very weird. So you want to invest it somewhere, and you start looking for those deals, and you sort of go, wow, Apple stock's really cheap. And, look at Apple stock, barely dented by this thing. It's just really crazy. And I think real estate in Portland is one of those things where, over a 5 or 10 year period of time, it's going to have ups and downs, but it's going to have a lot more ups and downs.
And like you said at the beginning of this, the things that brought us back in terms of why, people moving up here after the last one, that really hasn't fundamentally changed here, some of those advantages. And if anything, our economy maybe has gotten a little bit more diverse to different industries. So I think that's going to bode well for however this thing will come out.
Out of the 50 states, Oregon is 5th from the bottom in deaths per capita from COVID.
Yeah.
And I don't know what that means. And I want to be careful saying that, because that number could change 6 months from now.
Right.
But I think it'll be interesting to see where people want to live or not live because of this. And I've lived in Oregon my entire life. I'm true Oregonian. I'll never leave. But if I was living in Georgia or Florida or Nevada, where politicians are sort of making these crazy claims like, go crazy if people die, whatever, I might want to move to a state where my governor valued my life. I mean, I don't know. I think that's one thing that could happen. And I think California and Washington, we did relatively well. New York did very, very bad. New York shut down way too late.
Yeah.
And
we're still cheaper than everybody on the West Coast, Christian. I mean, compared to Seattle and San Francisco and LA in a quality of life, I mean, you're going to still see immigration up here, I think.
Yeah. And the leading cause of death in the state of New York right now is COVID. I mean, it'll be interesting to me to see where geographically we see people moving from and to, and I don't know the answer to that. But around the country, I could see people sort of saying like, hey, that's a community I don't feel safe in for whatever reason, because I didn't like the governor or what he or she did, or, I didn't like the COVID, or I didn't like all the people swimming in a swimming pool, during an epidemic. I mean, I don't know. But I think people with kids and families, they like to feel safe.
Well, I think as you talked about I think the experience for what we've had here versus in some of the markets back east in terms of how this thing is played out is so different when you talk to people back in it. So I think it may be another, I don't want to say quiver, but we've got another thing. Well, shoot, maybe if looking at places where to go, Oregon's not going to fall off the list because of this. So,
coming through the last two recessions, every time there was a lot of discussion about how that recession would transform life. Right. And how afterwards things would never sort of be the same. So there was a lot of, as you know, in the last one, mortgages was such a subprime mortgages was such a big feature. I mean, I remember people just, smart people. Oh yeah, people are never going to want to buy houses again. They're just going to rent their whole lives. I mean, you heard that too.
Oh, yeah.
And and I remember just being like, boy, I don't think so. I mean, I think people don't fundamentally change. In the short term, you change your behavior, but I think long term, what people want doesn't change that much. So I suspect that will reassert itself. When exactly it reasserts itself, I don't know, but I'm still pretty optimistic for Portland.
Well, good talking with you again. Be safe. Hope good to hear everything's doing well. And sorry you couldn't make it to Italy, but hopefully next year. Everybody's had to put their travel plans on hold.
Maybe next year.
Yes. Good to see you. Thank you.
Good to see you.
Talk to you again. All right. Thanks.
Bye.
That was great. Thanks, Christian.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.